Hello guys, welcome to the discussion of IAS 36 which deals with impairment of asset. This is a very important accounting standard. Therefore, it's worth for you to have an understanding about this accounting standard, but please keep in mind this is just an introductory session. There are many more things that you should learn about this accounting standard. This standard deals with the accounting for impairment of assets. Basically, impairment implies a drop in the value of an asset, but this definition is not sufficient for an accountant. Then what is the correct definition as per IAS 36? The technical definition for impairment is available in IAS 36. As per IAS 36, impairment is that exceeds its recoverable amount. As per the technical definition, we need to establish two things in order to assess whether an asset is impaired or not. What are those two things? The first one is the carrying amount of the asset. The first one is the carrying amount of the asset. This can be readily obtained from the accounting records. Actually, carrying amount implies the value of the asset as per the accounting records. The next variable required for the impairment assessment is the recoverable amount. Recoverable amount of this asset implies the economic benefits that is expected from the asset. This is an accounting estimate. In order to estimate the recoverable amount, two things needs to be estimated. What are those two things? The first one is fair value less cost to sell. This needs to be estimated based on available market condition. The next variable is the value in use. This is estimated as the present value of future cash flows associated with the asset. Accordingly, the recoverable amount is the higher value of fair value less cost to sell and value in use. Once we are done with recoverable amount, we have to compare it with the carrying amount of the asset. If the carrying amount is higher than the recoverable amount, the impairment loss is computed in the following way. Impairment loss equals carrying amount minus recoverable amount. Okay, then let's try to understand this theoretical aspect with a simple example. Assume a hypothetical company called Company A, which has a motor vehicle within its property, plant and equipment as at 31st March 2022. Impairment were observed and therefore an impairment test was conducted. Please keep in mind, impairment is performed if indications of impairment are present. Okay, now we can see a nice motor vehicle and the financials associated with this motor vehicle have been provided to us. As at 31st March 2022, carrying amount of the asset is 500,000. CU stands for currency units. Then value in use has been provided, which is 450,000, whereas fair value less cost to sell has been provided as 475,000. Now, what is the question? Is the asset impaired or not? That is the thing we need to determine given the information available. Now let's try to use the inputs available in this question to develop the answer. Okay, first I am picking the value in use, which is 450,000. I directly extracted this from the information available in the question. Then I am taking fair value less cost to sell. It is also available in the question and I directly extracted it from the question information. Okay, as we have already discussed, the recoverable amount is the higher value of these two variables. Accordingly, recoverable amount is how much? It is 475,000, which is the fair value less cost to sell. As you can see, the higher value between these two variables is fair value less cost to sell, which is 475,000. So we can estimate recoverable amount as 475,000. The then recoverable amount needs to be compared with carrying amount. Carrying amount is 500,000. I have taken this value from the question. Okay, carrying amount is 500,000. Now we have to compare the carrying amount with the recoverable amount. This comparison indicates that the carrying amount has exceeded the recoverable amount. So we can conclude that the asset is impaired. Why? Carrying amount has exceeded the recoverable amount. It is in line with the definition laid down in IAS 36 with regard to the impairment loss. So we can calculate the impairment loss as the difference between carrying amount and recoverable amount. So the computed impairment loss is 25,000. Okay, so this is how we can perform impairment testing. But please keep in mind, this is just an overview of the scenario. You have to learn these things in greater detail in order to be an expert in IAS 36. Okay, before winding up the session, I would like to move one step further. This is how we are calculating the impairment loss if the asset is impaired. But we have to understand how we are accounting for this computed impairment loss. The accounting entry is like this. We are debiting impairment loss account by the impairment loss amount, which is 25,000. At the same time, we are crediting accumulated impairment loss account by 25,000. Impairment loss account is an expense account, whereas accumulated impairment loss account is an asset account, which implies a reduction in the value of the asset. Okay, my dear friends, this is the conclusion of our initial discussion about the impairment loss. Please don't forget, this is just an overview only. You have more things to learn in this interesting accounting standard, and I hope you enjoyed learning this accounting standard with me. In order to learn more things, please join with us for future videos. Thank you very much.